Imagine waking up to find that the cost of your daily essentials, fuel, groceries, even your favorite gadgets has suddenly spiked. This isn't a dystopian future, but a potential reality stemming from the recent shifts in the US-Canada trade relations. Have you considered how political tensions, especially those concerning trade and energy, directly impact your wallet and daily life? The evolving dynamics between the United States and Canada are set to influence everything from gas prices to the availability of certain products. In this discussion, you'll gain a clear understanding of the recent changes in the US-Canada trade policies, the controversies surrounding the Keystone XL pipeline, and how these developments might affect you. I've decided to take a deep look into the intricacies of the international trade and energy policies. My goal is to break down complex topics into relatable narratives, ensuring you're well informed without the jargon. We'll explore the following: the recent tariffs imposed by the United States on Canadian imports, the implications of these tariffs on both economies, the controversy surrounding the Keystone XL pipeline, Canada's response and potential retaliatory measures, how these developments could influence your daily life. Let's rewind to early 2025. United States administration, citing national security concerns, imposed a 25% tariff on imports from Canada and Mexico, with a slightly reduced 10% tariff on energy resources from Canada. This move was justified as a measure to combat threats like unchecked drug trafficking. However, the ripple effects of these tariffs are vast and complex. The US government's decision to impose these tariffs were rooted in concerns over national security and economic imbalances. While the intent was to protect domestic industries and address issues like drug trafficking, the broad application of these tariffs mean that a wide range of Canadian goods, from raw materials to finished products, are now more expensive for US consumers and businesses. What are the economic implications? For the US, increased costs in terms of American companies relying on Canadian materials face higher costs, which often trickle down to consumers. For instance, industries dependent on Canadian steel or aluminum might see production costs rise, leading to more expensive products. They will experience inflationary pressures. As the cost of imported goods rises, overall inflation can accelerate, affecting everything from groceries to housing. But we're already in a housing crunch. How much more can we take? The economic implications for Canada will have export challenges. With their largest trading partner, Canadian exporters might struggle to maintain their US market share, leading to reduced revenue and job losses. Then there is the economic slowdown. Key sectors, especially those heavily reliant on US markets, could experience downturns impacting the broader Canadian economy. Let's move on to the Keystone XL pipeline controversy. The Keystone XL pipeline, designed to transport Canadian crude oil to US refineries, has been a contentious issue for over a decade. Initially halted by the previous US administration due to environmental concerns, current administration is pushing for its revival. President Trump has publicly urged the company behind the project to resume construction, emphasizing its potential benefits for energy security and job creation. However, the project's developer, TC Energy, has already abandoned the project in 2021, citing regulatory uncertainties and shifting energy markets. Canada responded in the retaliation of the US tariffs and announced its own set of countermeasures. These include reciprocal tariffs by imposing equivalent tariffs on US goods entering Canada, targeting sectors like agriculture, consumer goods, and industrial materials. This means products like US dairy fresh produce and certain manufactured goods could become more expensive for Canadian consumers. Export restrictions could also mean limiting exports of critical minerals essential for manufacturing technologies like electric vehicle batteries. For individuals in both countries, these policy shifts could manifest in higher prices. Everyday items from gasoline to groceries might see price hikes due to increased import costs and supply chain disruptions. Then there are job market fluctuations. Industries affected by tariffs may slow hiring or even lay off workers, influencing employment rates. Both countries are already experiencing a recession. Then there is the market uncertainty. Stock market could experience volatility as businesses adjust to the new trade environment, affecting investments and retirement funds. In an interconnected global economy, political decisions reverberate through markets, industries, and ultimately our daily lives. Staying informed and understanding these complex dynamics empowers you to navigate the challenges and opportunities they may present. As these events unfold, consider how they might influence your choices, especially us here in the Great White North, from the products you buy to the industries you support. Thank you for joining me. Remember to subscribe to the channel, leave a thumbs up for the algorithm, and I will catch you in the next episode.